The dollar index is trading higher here this morning as we prepare for a really big week in the financial markets. On Wednesday, we have the FOMC press conference with Jerome Powell. We also have CPI numbers that morning, and we have the producer price index the following morning. So we're getting some inflation reads, some words from the Federal Reserve, and a whole lot more market volatility. Let's talk about what I'm looking at going into this trading week, and I'll try and give you as much information as I can to help you prep for this pivotal week. So first of all, let's take a look at how the markets are performing here this morning. We've got the dollar index breaking out, it seems like, from this 105 level of resistance. The VIX is trading higher, up 6% on the day. The S&P 500 is slightly pulling back, but it doesn't seem like we really have any directional bias here, and markets are staying relatively quiet because of that upcoming news event on Wednesday. There's not a whole lot of direction in this market just yet because, again, volatility is expected to be low until you get into that CPI event Wednesday morning. Same thing with the NASDAQ not moving too much. The Dow Jones just slightly lower on the day, and the Russell, what was down 1%, has snapped back those losses and is back to flat on the day. Meanwhile, taking a look at gold on the daily chart, you can see we have hit a level of support, and so far price action seems to be responding to it. I do have a long position on this one, and if we break through that level of support, I will be closing out. I'll talk a little bit more about my position and fundamentally why I still like gold long in just a little bit. Silver is also finding a little bit of a low here around the 29.4 level. And oil, which I'm short on, is making a move back up here. I do have a stop loss trailed into profit just above this level of resistance. So if we break through that, I will be taken out for a profit on this position. The 2-year yield, as well as the 10 and 20-year yield, made big jumps on Friday with the jobs numbers coming out better than expected. So again, forecasts for interest rate cuts were lightened because of the strong jobs data. And so what we see here today is we see a little bit of that coming back, but not so much on the 10-year and 20-year, which continued to push higher. Not going well for my TLT position, which is of course sensitive in the opposite direction to interest rate yields that we just talked about. So when these are rising, TLT typically drops, and I am long TLT. So if we do start to see, cool inflation data this week or a Fed that sounds dovish, you may see this market kind of reverse. But otherwise, we could see more of the same. I don't know what's going to happen with the CPI number. I don't try and predict those things. But if we do see, we will likely see volatility one way or the other. I do have a position open on this one, so we'll see how TLT plays out this week. Taking a look at Bitcoin on the weekly chart, you can see we are just up near the resistance point here at the all-time highs, but have not been able to break through that. Same thing with Ethereum, pulling back a little bit more. And the euro is actually something to talk about here today. We can see the euro really broke through levels of support here. Now actually is tagging another level of support as we speak. I'm very curious to see how price reaction goes from here because, again, a little bit of dollar strength coming with that jump in interest rate yields on the 10 and 20-year yield that we talked about just a moment ago. If you do get pullbacks, the euro is looking like it may have more downside in the short term as the dollar strength does seem to be forming with that very clean price action on DXY. But here's what I would say about the dollar index on a price action standpoint. Let's watch to see how this candle closes. If you close strong or if you close weak with a wick on top, both of those could tell you some very interesting stories about how the market is feeling going into this big week. Here's a look at some of the current top setups on the Edge Finder. We can still see TLT. The reason I'm long is because the 10-year government bond is still getting a bullish reading. That's off the back of cooling economic data when looking at things like GDP numbers and PMIs and retail sales, etc. I'll pull those up in just a moment. But we also see gold still getting a bullish reading for much of the same reasons. Cooling economic data does lead to the Edge Finder pointing more bullish for gold simply because that could lead to a weakening dollar and a weakening dollar index could be strong for gold. But at the same time, it is also economic uncertainty can cause some bullishness, relatively speaking, for gold, where investors may want to diversify or move into it instead of just being long stocks. I am bearish oil because we are getting a reading here, but you can also see we've got a lot of Swiss franc pairs that are on this list, and the Russell actually making an appearance as a possible bearish setup as well. Here's a look at this week's commitment of traders data. We'll see where net positioning is sitting overall. We've got the Swiss franc, the yen, the CAD overall still our most bearish things, and then gold, the Nikkei, silver, oil, copper. These are your most bullish assets overall, proportionally speaking, from institutional money, according to the CFTC's commitment of traders non-commercial data. I know that was a lot, but I have to say it each time to clarify for people who are newer to my videos. Also, this is the latest weekly filing. We can see what they, now I want to mention, I always make this point, but for new viewers, please understand this data right here is longer term in nature. At least that's the way I look at it, because these things change very gradually. I mean, the Swiss franc and the yen have been bearish for like a year straight now, so they don't change all that much. But what does change is the weekly filings. And we can see the latest weekly filing by scrolling down and taking a look at this chart. So in the latest week, we saw them buy some pound. And when I say they, I'm talking about institutional reporting, non-commercial positions. We can see the number of contracts or the lots of contracts that they bought or sold, the percentage movements, the overall net long short positions. There's so much to unpack here. So they bought the NASDAQ, the NZD, GBP, JPY. Gold was also bought, silver, USD. These things were on the buy list for the latest filing. And on the sell list, we've got SPX, we've got the US 30, the oil market, platinum, 10-year bonds, Nikkei, Swiss franc, etc. So feel free to pause this video right now. And also I should mention, if you do not already have a copy of the Edge Finder and you'd like to try it out for 30 days, we'll leave a link down below in the description where you can fill out a quick application form to check that out for yourself. If you'd like to get 30 days access to our tool, just take a moment, fill out that application, and someone from our team will reach out with details on how you can get 30 days access to the software tool that I use in all my videos to find the trades that I take. I mentioned we'd take a look at some economic data and why I am bullish on gold and bonds right now, and it is partially because of this right here. We are starting to see some misses in economic data relative to expectations. So you can see a 1.6% was expected for the GDP growth number. We got 1.3. That is lighter than anticipated. If we take a look at PMI numbers in terms of manufacturing, we came in lighter than expected, but on services we beat. So a little bit of a wash there. Retail sales, latest filing, the report was expected to come out at 0.4. We got 0% growth on retail sales. Here's the jobs data from last week, which was better than expected. But again, that's only one figure. Let's also take a look, for example, at JOLTS. You can see JOLTS have continued to deteriorate. These are job openings. Job openings are declining. And so this slowdown in the economy, to me, makes me a little bit wobbly about just wanting to stay outright long stocks, and makes me a little bit more wanting to have a position and keep a position in things like gold and bonds, which are a little bit more, potentially prone to go up if we do start to see, rate cuts expedited here off of lower than expected economic data. I hope that makes sense, but that's kind of where I'm at with that position. Another chart that's definitely in the news is Nvidia. Nvidia, well, it's always in the news, but Nvidia recently is especially in the news because they just did their 10-for-1 stock price split. You can see that it was at 1,200. It is now at 120. No, it did not lose 90% of its value. It just offered a 10-for-1 split. What that means is that if you had one share, you now have 10, but it's priced at 120. So they just did this. Why would they do this? Well, it makes it more affordable for a lot of investors to purchase shares of Nvidia. Instead of it being 1,200, you can buy it for 120. The actual value of the company has not changed by any means. It is simply the price per share, and they've added more shares to the mix, if that makes sense, or decrease the number of shares, right? So yeah, I'm sorry, I'm getting mixed up. They split it 10-for-1. So a lot more shares were handed out, making it so that existing shares were slightly less valuable. So anyways, at the same time, you have XLK making a move higher. XLY, this is the consumer discretionary sector. You've got comm services slightly down here. Consumer staples slightly down on the day. Financials down. Real estate's flat. You've got industrials. And, here's utilities, energy, and healthcare. Now, why pull up these sectors? Well, individual sectors are not always performing the same way. They may very much greatly diverge from one another based on what the market is telling you. And semiconductors and tech continue to be the winners this year. Will that happen forever? No, it will probably change at some point. Certainly change at some point. Just a matter of when. Right now, we see utilities bouncing back and also XLI, which is industrials. And some of the losers on the day are financials and staples, which are your kind of boring companies like Walmart's, etc. I wanted to also talk about the S&P a little bit because I talked about how slowing economic data makes me a little bit cautious on this one. If we do start to see, economic data continues to cool off and the market perhaps enters into a bit of a corrective period, I am still a bull. I do still have positions open. In fact, I'll show you. This is my current positions. You can see I am long XLK and VOO. This is the technology and S&P 500 ETFs. So I'm long on these, but I've also sold covered calls to hedge my bets a little bit, as I think that upside for the stock market right now is a little bit limited. If I'm wrong about that, then I will be called away from my shares for a profit overall of where we currently sit. So there's the TLT position, my gold position, and a couple stocks at Starbucks and PayPal that I've recently picked up positions in, just very small relative to the account overall. Also, if you're looking for a new broker, there are several linked down below in the description. These brokers all have special sign-up perks. You can get free shares if you sign up with WeBull, or if you sign up with one of the other brokers, there are deposit bonuses. Just check out the offerings down below in the description. It's free money to sign up. Why not take advantage if it's something that fits your criteria for a broker? Again, do your due diligence, see if it's right for you, and thank you very much for watching today. See ya. If you're looking to improve as a trader, we've got some cool free resources here that I wanted to share as we close today's video. Down below in the description, there is a link to join our Discord channel or our Telegram channel, and we also have our website, a1trading.com, where traders can get access to free course material to help you improve as a trader. Remember, we are also live Monday through Friday on this channel around 9:30 a.m. US Eastern, broadcasting most live news events and that sort of thing. So hope to see you there. And also, we do have a couple videos here showing up on the screen. If either of these seems like it might be helpful to you, then make sure to click here or here, and we'll see you there.